The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Hi there, welcome to the COB. It is a Friday. I'm Nadine Blaney. Juliet, it's not the best of circumstances, I suppose, that we join you today with the specter of, real escalation in the Middle East coming through today. Iran and Israel, there are reports that Israel sent a missile into Iran, at least one site. Now, that's not saying that this is escalating into a full-out war between Iran and Israel by any stretch of the imagination, but it is a tinderbox.
Yeah, it is. I was talking to Scotty just about an hour ago now, actually, because obviously you've seen a lot of repricing happening in the last couple of hours, specifically that big spike you saw in Brent in a flight to gold, stocks in a flight to safety, and of course a dumping of risk assets ahead of the weekend. So it kind of makes sense as well. You don't want to be long positions if you don't know what's going to happen. But certainly everybody seems very jittery, and actually Jonathan Takadina as well from MPC Market saying they hit the phones, they started buying a lot of those gold players as well.
Yeah, there's been so much focus on gold, hasn't there? Because a lot of the Aussie gold producers, as you would well know, have been underperforming, I think, about 3 years when it comes to some of the fundamentals. So yeah, that will remain in focus, as will oil. I'm just looking to see if there was any sort of new headline coming out in terms of what's going on in the situation in the Middle East, and not so far as I can see. But we will continue to have that as a backdrop for our conversation coming up with Shane Oliver from AMP as well. But if we are looking for positives, one of that might be that we are seeing markets off the lows of the day. The COB Australia Index has come to a close down by 1% or roundabout there.
Indeed, and of course we saw that very big drop initially when the reports happened, which is when you were on the call, and a little bit more of a comeback. But in terms of this flight to safety, it has been, as we mentioned, the gold players, it has been the dollar, it's been movement in bonds as well, and the surge that you're seeing in the oil and gold prices. Worth pointing out, Iran produces about 3 million barrels of oil, which is 3% of global supplies, mainly to China and Asia. So, of course, concerns about if there is a full-blown war, what does that mean to global oil supply?
So what does that mean then for inflation and the already sticky inflationary situation that we had? I mean, we came into today quite negative, and that was because we have had data in the US that continues to support ultimate patience when it comes to interest rate cuts in the United States. We had further FOMC speakers out overnight. Williams comes to mind, just saying that they are in no rush to look to cut rates anytime soon. And, when you do put in the addition of potential, rising oil prices, it just has left investors spooked, and rightfully so. We did have the Aussie dollar as well, down around 5-month lows at one stage today.
Yeah, so let's have a look at the miners. I was hoping we might quickly look at the energy players too, but we'll kick it off with some of those mining players, having a look at those. Maybe not. Yeah,
there we go.
BHP, Rio, Fortescue, South 32. But let's flip it because, you know what? I will tell you what's happened with some of these energy players, because energy and gold is where we really wanted to be focusing in on today. Santos, they're up by 2.4%, and Woodside Energy down by about 0.2%. And then when it comes to some of those gold players, if we've got those as well, Evolution Mining up by 2%, Northern Star is up by 1.3%, and also looking at Genesis Minerals up by around 3%. So there's been obviously quite a lot of momentum coming through in those oil and gold players, and maybe we'll get those up in a bit as well when we finish our conversation with Shane Oliver from AMP.
There we go.
There we go. There's the gold players. Okay. So Evolution Mining, as I mentioned, up 2.1%. This is really interesting in terms of, even before what we saw happen today, as you and I have been talking about all week, so many people coming through with these gold notes. Wilson Asset Management out this morning saying that gold stocks here are not catching up with the price that you're seeing. Their preferred pick is Evolution Mining. And then I asked that to Todd Warren from Tribeca, And he said that would be their pick too, because also, of course, Evolution has that aspect of copper exposure as well, and a big run up that we've been seeing in copper.
And I know that both of those interviews are up online and very worthwhile checking out. But you've got the Evolutions of the world. We've already got the production report from Evolution, which was well received by market, also has copper exposure. We will hear from Northern Star Resources in terms of its quarterly production report coming through on Monday. But West Gold, a smaller producer explorer, came up on the call today. And look, again, both of my guests said you want to be with some of the bigger players. But I read a note from UBS, Juliet, and I think the quote was, there is not a gold producer in Australia that it would be bad to be in right now, considering the circumstance.
And actually, I've got to scratch my memory, but Joel Fleming as well from Yarra Capital talked about some of the micro caps. So listen to that interview. He also had a tin stock, which is interesting.
Tin's an interesting one. Yeah. All right. Online.
Let's get to Shane Oliver from AMP, who has been monitoring these developments as well, Shane. In fact, it was your note that I was reading that suggested Iran produces about 3 million barrels of oil a day. So I guess the concern here is what could potentially happen to the global oil supply and, of course, the inflationary picture.
That's right. And that's why, if Iran was a country that didn't produce a lot of oil, then it wouldn't be much of an issue. But the reality is that it does produce about 3 million barrels per day. Obviously, it consumes a chunk of that itself, but a big amount of that also finds its way to Asia, in particular China. There's also 20 million barrels passing through the Strait of Hormuz on a daily basis. So that's out of total global oil and liquid energy consumption of about 100 million barrels, I think it is. So it's quite significant. And obviously, we saw the reaction earlier in the week in response to Iran's attacks on Israel, worries about what Israel will do in retaliation. And obviously, we saw some of that today, or it looks like we've seen some of that today. Interestingly, the market reaction, although it was quite negative earlier in the day when it first started, or reports started to leak out, it seems to have settled down a bit since then. And that's why you've seen the oil price sort of settle back. On West Texas, I think we're currently around 84, 85. We did get above 86 at one stage there. Brent was above 90, but we have settled back down again. So right now, the world oil price is actually a little bit lower than it was this time a week ago, believe it or not. But obviously a lot riding on the severity of those attacks. I think the reason the markets have sort of settled down a little bit in the last hour or so is because the Iranian media appears to have downplayed the damage that was done and the attacks themselves, and also indicated that their nuclear facility wasn't affected. So it looks like, if this is the case, then maybe Israel has pulled its punches, responded in a sort of a proportional way, and this could well be the end of the matter until it all flares up again at some point in time.
Yeah, because there's a lot of signaling that's been going on in this narrative as well. Iran needing to be seen to do something. We're not geopolitical experts here by any stretch of the imagination, but you've got a lot of historical perspective up there in your brain there, Shane. And in terms of markets, I was speaking with a guest earlier today who pointed out war, in times of war, not saying that's what we're in or headed towards, but can often, perversely perhaps, be good for markets.
It can be, and there's different ways of looking at it. If you look back historically, crisis events like terrorist attacks, like the start of wars, World War II and so on, the initial reaction is a negative one. Markets sell off, investors are worried about the future. Then provides opportunities. It may not sound nice to say this, but that is the reality. The market falls, then investors are sort of saying, well, there's bargains to be had here. We've had a correction or a severe fall, and then the market settles down. So typically after these major events, a little while later, 3 months, 6 months, 12 months later, the share market is up. I think the average decline is something like 6%, huge range around that, of course. If you look at it 3 or 6 months later, you're up something like 9% or thereabouts. So that's the normal reaction. I guess the other aspect is that wars can set off certain types of spending, which companies can benefit from, production of things which unfortunately gets blown up. So it can be good for defence stocks and production generally. But by and large, I'd far rather not have the war, given the human toll it takes.
Yeah.
And of course, a war in the Middle East would not be a good one, particularly initially, because of the impact on oil supplies, given so much oil comes out of the Middle East. Yeah, we may be moving away from it, but that is a very gradual process. And right now, we are still very dependent on oil coming out of that part of the world.
And as we said, Shane, going to add into the inflation picture as well, you gave us a really good chart about where global inflation is already as we look ahead to the inflation print next week from the RBA, from Australia, I should say, but what this all means, of course, for the RBA and whether or not, as you say, it doesn't have to do what the Fed does.
Well, I don't think it does. I think the quote of the week came from BOC, Bank of Canada Governor Macklem, hopefully I've pronounced his name correctly there, where he said, we don't have to do what the Fed does. We do what's right for Canada, or words to that effect, right for Canada. And what the chart shows is inflation across a range of countries. I haven't got New Zealand in there, but I've got most of the other majors. And you can see the broad trend is still down. If you looked at the underlying numbers, which this chart doesn't show, like look at core, all of the countries that reported in the last week showed lower inflation, whether it's Canada, UK, Japan even, New Zealand, they also showed lower inflation. So yes, there has been this, stickiness evident in the US, and there are concerns about services inflation elsewhere. But the broader trend globally is still down on inflation. And I think, hopefully, fingers crossed, we'll see the same thing when the numbers come out next Wednesday for Australia. We will get the quarterly number, which will probably drop from 4.1 to 3.4. And the monthly number, as we already know, is down around 3.4. And also the trim mean, of course, is worth focusing on as a measure of underlying inflation. It'll probably show a further slight fall as well. And hopefully, with a little bit of luck, those numbers will remain below RBA expectations, has been the case for the last few months, and was certainly the case for the December quarter. So we should hopefully get some better news there. Is it going to suddenly cause the Reserve Bank to relax and cut interest rates? I don't think so. I think the RBA, even if we do get 3.4%, even if it's just below their forecast of 3.5%, they'd probably say, well, we've still got a tight labour market. We've still got sticky services inflation. We're going to wait a little bit longer yet. And no doubt they'll also reference what's going on in the US. So I think the RBA will still sound fairly cautious, even if we do get those better than expected inflation numbers next week.
Okay, so Shane, we were talking yesterday and the day before, maybe talking about, since the run up in October, valuations were looking a little bit stretched, but we've had, a decent amount of heat coming out of this market, at least at an index level this week. It looks like we'll be down by, certainly more than 2%, pretty close to 3%. It is pretty much 3%. So, like when you think about the S&P ASX 200 sitting at 7,567 as the last of the day's trades come through, how are you thinking about the likely market direction? Are we still, you thinking, for a correction?
Well, I think we're seeing it. There's lots of debate about what a correction is. I know the definition that many have latched onto. I think that they spent too much time looking at Bloomberg. It's come to be defined as something like 10%. And a bear market is 20%. I've never quite seen it as that simple. I tend to see a correction as just a significant pullback. So even if we stopped out here, I'd say we've had a correction. The Aussie market is down, I think, about 4.5% from its high, which was about 3 weeks ago. Similar story elsewhere. So globally, you're looking at falls of around 4 to 5%. That's taken a lot of the heat out of markets, as you say. RSIs, which are a common technical definition of whether a market's overbought or oversold, have gone into oversold territory, not quite at the extremes yet, so we could still see some more weakness in markets. But my view is that this is still a correction. Yes, we could still have some more downside. Maybe things in the near term won't turn out as bad as feared in the Middle East, and we've seen that. We've seen the end of the issue regarding Iran and Israel, at least for now. I'm sure that one will come back again. But so maybe that's the case. Maybe we're seeing the bottom. But I think the risk is we could still have a bit more downside in markets here till markets are a bit more washed out. But I think the broader picture is still one of a rising trend this year. Markets had become very overbought, overvalued, overloved, and they were due for a pullback. Obviously, Iran, Israel, combined with the Fed, has given us the trigger for that. And but that's what I think it is. I think it's a correction in a broader sense. We're going to see markets find a base. Who knows when precisely that will be, and then the rising trend will resume, and we'll end up with an okay year on the back of okay economic growth, okay profits, and central banks ultimately moving to cut interest rates, albeit maybe a little bit later than was factored in earlier this year.
Well, Shane, I feel like on a day like today, I'm going to run with the okay. I'm going to run with the the longer term picture. It's it's been pretty big week in terms of news. Not just around the world, but here in Sydney as well. I'm sure everybody's feeling it. So why don't we let you go and start enjoying your weekend? And we look forward to catching up next week.
Thanks, Shane.
I love your offsetting colours today.
I know. We didn't even look like highlighters or something.
Or a Christmas tree.
It does look a bit like a highlight. Although I'd say my favourite highlighter colour is yellow.
Yes.
I'm a bit nerdy on this front. I discovered years and years ago if you're highlighting yellow, you can then run it through a photocopier and it picks up the highlight and what's underneath it.
Wow.
But the other colours get covered over.
Shane, you are my kind of person, I tell you.
I was thinking back to when I used to study, and I don't know if anyone's a Schitt's Creek watcher, but I used to just highlight everything like Alexis does, and David's like, is there one part of the page you haven't thought if I highlight it, it'll go into my brain. Kids these days don't even know what we're talking about. Anyway, Shane, thanks so much.
Right.
Have a great weekend.
Okay, take care. Bye-bye.
All right, let's have a look at the after close leaders and laggards. No, the stock of the day. I do it every day. Woodside Energy.
Woodside. I spoke with Adam Dawes from Shaw and Partners. Conrad Song from Macro was in there as well. But look, this has been a bit of a pain trade for Adam. Conrad called it a hold, said he's pretty optimistic about its long-term LNG contracts and other catalysts. But Adam he's just been disappointed with how this stock has performed.
You sort of gravitate to the larger end of the market. I keep saying that, well, that's where we gravitate to, but it really hasn't provided us the growth that we would have expected. They took over BHP's assets, and that was supposed to be the new herald of this company with the amount of growth in those oil assets. But it really hasn't translated into profitability on the share price. And then you've got ESG overlays. There's lots of things in there that are sort of really struggling, and I just think that, you're better placed in something like a Santos or a Beach.
All right, let's have a look as well in terms of some of the corporate stories that we were following today. We talked about Woodside Energy there. I mean, of course, impacted by the developments that we have been seeing. So it came off some of the earlier lows as we saw that pick up in oil prices, but it did see, I guess, a little bit of a move in some of its quarterly numbers.
Whitehaven Coal. So we're in this phase where we get these quarterly production numbers right across, the spectrum of metals and mining. So Whitehaven Coal having a good day off the back of that. Pilbara, though, was down by about 2%. Evolution Mining was, in focus because, as we were mentioning, that Wilson's preferred exposure. We've got another note out on gold coming from Wilson's.
Yeah, and Macquarie Group to pay a $10 million fine after admitting that it failed to implement appropriate controls to protect its customers from fraud.
Okay, so let's see if there's any sort of divergence when it comes to those names and what actually led the market. And keep in mind that this is in terms of percentage terms, so it's not market cap. So sometimes it can be a little bit interesting to watch. But Genesis Minerals is one. Now, there was just a bit of news. It did see its price target lifted by Canaccord Genuity to $2.90 per share. But interesting to note that Ord Minnett cut its price target by 2.6% to $1.85 per share.
All right, to the losers today, we saw Polynovo, Pinnacle Investment, Corporate Travel, Karoon Energy, and Weebit Nano have some significant falls. Karoon Energy, I think there was a board update as well, but down by about 5%.
Yep, and let's go to some of the mid to small cap companies, and you can see their bet makers up by 13% in Boron. So that would be off the back of, just some of the energy enthusiasm today. And on the flip side of the equation, we've got Novonix down by 8% and WAM Research down by 8% as well.
And they've been very busy as well. All right, let's have a look at what is happening overnight when we have a look ahead to the German PPI figure, the UK retail sales. That's China foreign investment. Is that coming out on the weekend maybe? And then, of course, looking at some of the stocks that are coming through with earnings as well. American Express, Procter & Gamble too. And a big week ahead. We touched on CPI with Shane. So we've got CPI and PPI for March. Also the flash PMI, which I believe is for April. And Anzac Day. We get a holiday.
Oh, we do.
On Thursday.
We do get a holiday. So in the United States, keep your eye on the Richmond Fed Reserve Index. We get new home sales in the United States, US GDP as well. And then looking ahead to next weekend, which feels like ages away, but we do get Chinese industrial profits. We've got a number of really good interviews about China up on the website from this week. I spoke with Andrew Swan from ManGLG really early in the week. I think it was Monday. This is pre the GDP read coming from China. And it's an interesting one to go back on and listen to. You know, obviously the market is focused on nominal GDP as opposed to real GDP, whereas the Chinese officials are very focused on that real GDP, you know, target of 5%. But he's really seeing and calling for structural change in China. He says there's baby steps being made but not to the extent that needs to really, you know, reassure markets. And I know that Scotty, when we spoke with him yesterday, like China's pulling a lot of focus. Obviously the Middle East will be the here and the now, but you know, broad strokes for Australia, China is just so important.
And India too, elections next week as well. I spoke to Vandana about those too. And of course, coupled with the weak Ripu, high oil prices, a lot going on there. But in terms of our market, down about 1% on the CBO 200. 14.49 off, as we mentioned, the lows of the day, but still not a great week for investors.
No, and the S&P ASX 200, the final figure is 7,567, down by about a percentage point week to date, off by 2.8%, month to date, down more than 4%. So that's what Shane's talking about, you know, a correction being underway. Just looking to New York futures, NASDAQ and S&P 500 both looking weak as we move toward the London Open.
I should just note as well, the Nikkei in Japan almost 3% lower, the biggest percentage drop since September. So tech, chip-related stocks declining there too after these reports, we should say reports of Israel's strike against Iran.
While we're on breaking news, we've been waiting for the UK retail sales report. It is out early in the session there, and they stagnated in March, according to their stats agency. So again, a little bit of slowing there.
Should we just stay here all night and
But
just
maybe.
keep giving all the breaking news story? The Nadine and Juliet
I do.
network.
I still have breaking news in my
JNN.
blood.
I do
as
too.
You do as well.
Yeah. Anyway,
all right.
have a safe weekend.
Yeah, a really good weekend, and we hope to see you back here next week.
All right, bye.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil,
Oh, hey, Ken.
here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible!
1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful!
It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.